Hey, YouTube, how's it going? Hopefully your trading's going well. I just wanted to do a quick video here on the VIX, and how to use it to forecast an approximate move, um, either a daily move or a monthly move, to give you some kind of expectation. Of course, as always, my thing is not to use any one item in isolation to forecast and make predictions and generate buy or sell signals, or to use as an action point. I like to use multiple things to confirm price action, and if price action agrees, then use a proper trade with proper risk management. That is the professional way. Um, that is the CMT way, the Chartered Market Technician. And these formulas here are not my intellectual property, actually. They are per the CMT. That's where I got them. And this is the professional method for computing expected moves in the market using the VIX. And so for the monthly, it's simply taking the price of the VIX, the current price, dividing it by the square root of 12. So that comes to 7.4-ish% move. And the daily is simply the current price divided by 16 for 1.61-ish% move. So if you come in here and you look at the VIX, now if you're gonna use it, in my opinion, it's hard to use for a monthly forecast just because it changes so much. Um, Volatility is different than a trending security, whether it's equity, currencies, commodities, indexes, etc. Volatility is just that, volatile. Swings up and down, crazy. It's very hard to predict. So these are very rough estimates, but I would say also that these can be used to forecast the minimum move, just because of volatility. Like, you want to understate volatility. So if this has a 1.6 move, average move, expected move, and it's highly volatile that day, it's going to be more than 1.6%. It's going to be more than 7.4% for that move on the month if that month is extra volatile. And so, as I always say, look at everything in context. Don't just use this formula and rely on that. Now, the way to rely on this is to say, okay, the market is either moving with me or against me. It's reached 1.6% for the day. Now I need to watch. What is it going to do from here? And that's where you come and look at the various indicators and setups you use to kind of get a context snapshot of the market and make an action or signal determination at that point. Um, but let's just take a look here on the monthly. So it opened here, what, around 72%. It came up here about 88.5%. So that's the drawdown, because it's a down month. So in hindsight, that move up's drawdown. And then it comes all the way down here, and then comes up a little bit, and it's currently at 32.5. So open price is 72. So on the monthly, um, that's interesting. Let's draw a trend line and see. That's a 40. That's saying 40%. That's Interesting. Settings, price range. Let's see. Let's see what that says. Okay. So it's actually down 23%. This said 7.4%. So as you can see, it's very volatile. Very volatile. Let's change this back. 33 down to 25. Interesting. 7.56 it's saying. I'm actually not familiar with this. It says minus 22.6%, but let's see. 25.72 is the current price divided by 33.35, which is open price, times 100. So that 77% minus 100, it's moved 22%. That's very volatile. Markets are very volatile. Wow. That's crazy. Let's go to the daily. So the monthly, I mean, yeah. Let's see on the daily. The daily, I think, would be a little bit easier. 6.57%. Interesting. That's very interesting. It's very volatile. What's this? 3.4%, 3%. Alright, this is probably like what, 2%, 1.7. So market's very volatile right now. As you can see, there is some volatility in the daily. VIX is in a squeeze on the daily. This here is definitely a consolidation pattern. Broadening. Right, let's go to the 4-hour. Yikes. So, but by broadening, what I mean is if you draw some trend lines from the base when the consolidation starts, the bottom of it is a little bit more reasonable. Let's see. So, I mean, even if you, so it's kind of overreached a couple of times right here. Right here, it tried to break upside, failed, it busted. Here, it tried to come break downside, failed, busted. But it's a consolidation pattern, So it's going to do that. But if you see how this is angled up, this is angled down, and it's kind of like getting wider as it consolidates more, that's called a broadening consolidation pattern, and that signifies weakness. And so it's not really any surprise that this is going to bust downside. See the squeeze? Momentum's red, it's bearish. The bearish directional bias is trying to cross. There's slight momentum per the ADX. If it builds, this CCI will break downside. And, it's tried a couple of times. Third time's a charm. It can keep going, but usually about the third time on, it can only consolidate so much, right? Eventually it has to make a move one direction or the other. It can't go sideways forever. And so looking at this data, the probability is downside because reached the top of the trend line, didn't come all the way down, failed to go upside. So it failed to reach the bottom, which suggests it's going to break out upside. It fails, comes back down, fails to go. Okay, now it's definitely consolidating. It's touching each trend line, etc. Then you get another partial, but this time it fails to go to the top, which signifies it's going to break downside. But if you take into the context of the squeeze, it's in a very tight consolidation now here, which means it's coming to the end of this general broadening consolidation pattern because it's super tight. As you can see here, at the end of this consolidation pattern, it got super tight before a big move up. So the CCI is about to break downside. You've got a squeeze with